The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Hi, folks. Basil Chapman sitting in for Darrell Martin. Darrell will be back tomorrow, and it's my pleasure to be here. And most importantly, this is the Diagnostic Trading Hour, and it's not Darrell Martin, but, as I say, Basil Chapman, and we'll be showing you some interesting things based on 10-minute charts. I know that Darrell loves to look at the 10-minute charts, does an incredible amount of work. In fact, what he does is he has a series of diagnostic tools that demonstrates the resistance points, the levels that you can expect to be support on a trend line, as well as looking at, if one is used to, say, Bollinger Bands, where you're looking at moving averages. So he's used certain tools to show you the expansion that would go from one deviation level to another deviation level, etc. So what I'm looking at here is I'm showing you that in the what I call the naked chart, there's nothing here. I didn't even have to use candlesticks. I could have used, it's just easier to see, but I could have used just bar charts. And I'm basically showing you that in this particular pattern that we're looking at right now, what you're looking at is from the lowest, most identifiable low bar of the E-mini future, and this E-mini future is right there at 2051.50 at 5:50 this morning, 10 to 6. There were a series of higher highs, and in the Chapman wave methodologies, what we look for is to make patterns easier to recognize. I look for the lowest, most identifiable low bar, and then merely count each successively higher peak above. And there should be 4 peaks, and at the 4th peak, you can expect either a time duration, a price duration, it would be a correction, or it's both. And in this particular instance, you went to peak A. This is a 10-minute E-mini December at 6:10 at 2054.50. You went to peak B at 10 minutes to 8 Eastern Time at 2057.50. Then there were a series of parallel high bars, 2 high bars with a breakout. I could have used that as a phantom peak in the Chapman wave. I don't do that with 10-minute charts or higher if I can help it. I do if it's a shorter term duration. And they went to peak C and then stalled at peak D at 11:10 this morning during my show. Usually I do the opening call. Opening call, of course, is my daily newsletter. Of course, I do that every single day. But I do the Tiger Technicians Hour, 11 o'clock till noon Eastern Time, Monday through Fridays on market days. And I did it this morning, and now I'm back again for another hour. And it's my pleasure to be here. And we've had 3 double tops at the 2063.25 level, gone sideways. Now, when you look at this, chart patterns repeat over and over. And in this particular instance, what I'm looking at is the time that it's taken to correct tells me that the MACD, the moving average convergence divergence, and the slow stochastic must have had some kind of hiatus. If the slow stochastic pulled back and went under 80%, that says that this bounce is probably just an extension and that we should go a little bit higher and then pull back. But if, in fact, they've been holding very steadily, there's another interpretation. So I'm going to take this away, and I'm going to show you something. This is the chart notated with the Chapman wave methodology right there. And what it shows you is that from that low bar that I identified, look, the MACD, the moving average convergence, divergence, and the slow stochastic had a strong rally, then pulled back. It went above 80% in the stochastic, then pulled back sharply, then started another move, but it did not take out the left side low, that low of 2,051.50. It went instead to 2,052.50. So that continues the move to the upside. And then the MACD expanded, went to peak C and D, but it then pulled back negatively, and the stochastic went under 80%. And it says that if there's a move here that closes in the, even though I've got a down arrow, if it closes above 2,063.25, or if it spikes above it, and then it closes above it, or it spikes above it and closes below it, those are two different things. If it spikes above and closes above, then I have to look at it and say, hey, is that a brand new A, or is that an extension, just an E? What I tend to do is I tend to go E, and if I look at the technicals and it looks very strong, I have no choice in this case to call it E/A. E is kind of negative because it says, whoops, be careful. At E, you can get quite a bit of a pullback. A is very positive. It says that the 10-minute chart would still need at least another hour minimum to be able to make a series of higher highs that takes it to a brand new D. So I tend to go with a more conservative approach, and we'll follow it as we move along. Now, I'm going to do this. I'm going to go to, say, the... I'm a little behind in the dollar contract. I think I've got to do about a 12 or 15-minute delay. So that's not going to show you very much with those. This is the GC contract. Let me show you something here, and we'll do this together. No, I'm not going to do that because I don't want to do something that historically I can't get wrong. After all, I can see it went higher. I'm going to go to something that I have to start fresh. Okay, here's the euro dollar. Is it going to rally? Here's a question. All right, so now we're looking at the 10-minute chart of the euro dollar. Using the techniques that I have available to me, the low of 1.23825 is the euro-dollar currency pair to 6, and this goes down to 1.23828. So we're looking at, okay, so that is the low. So this becomes leg A in the euro dollar. Nope, I don't see anything yet of a trade. I'm going to just leave this for the very moment because I want to look at something that's actually moving, and then I can give you a good sense of how you can use both the naked chart as well as using the technical tools, at least the ones that I use. So, all right, let's just find a stock. Doesn't matter to me. Let's find a stock that's actually moving. Let's see what Amazon's doing. Or maybe it's, nope, flat. Let's look at, IBB. This is a good one. Nope. Okay, let me explain what I'm looking at. The IBB, which is the iShares Nasdaq Biotech ETF, 10-minute chart. IBB is trading at 305.50. Had a huge pop-up at the beginning because of BIIB, that's Biogen IDEC. Now, if I was looking at this, in fact, we wanted this as a trade. We just missed it by less than a point this morning. Why? Because I was looking for a leg D in the daily chart, because you remember I just spoke to you about 4 peaks from the low bar going to a D. So this looked as if it had every requisite for a very nice move to the upside, and it goes peak A right there, and then peak B. And then what happens, instead of pulling back just modestly and then pushing higher, it stalls and forms yet another little pattern, and this little pattern says, if I take the low bar right here, this is a great example. It's an example of a spike to the upside, given that it is spike to the upside right there. A spike to the upside, given that it is based on, it's a sector play, but one of the stocks in the sector having a tremendous move to the upside. So it spikes all the way to 306.38. Then it pulls back to 304.19. So I'm going to put that down here. Look, 304.19. 304.19. And then what does it do? It goes another little A right there. And these are peaks. Remember, this has got nothing to do with A to B equals C to D. That's often spoken about at TFNN. This says that it is making higher peaks, and on the downside, we call them troughs, trough A, trough B, trough C. And what this says is there's a really good chance that you're going to get a move to 305.71 for leg D. This went to 305.68, just needed 3 more cents. And that would give you your D, and then you've got to be a little bit careful. And what it's saying is that within, I'm going to jump around a little bit, within the daily chart, look right here, IBB, that peak C at 300 and right there, peak C at 307.16 needs one more penny to make leg D, and then you got to be careful in this particular sector. That's what I believe. And we should see it maybe by tomorrow, maybe today, but maybe by tomorrow. The stochastics at 85%, the MACD is good. It should do it. There is no reason at this particular point to think that it wouldn't do it. And in the 120-minute chart, that would recycle, and that would become a leg C, and then it should still make it D, so it should go even higher than that. So in the 307s to maybe just under 308.25, I think that you might get some kind of a top in the IBB. So let's go back to the 120-minute chart. See, it's starting to build a little strength again, so we'll keep this on our radar. And it's called an inside buy mode within the context of a spike to the upside. So let's find something else that's moving very nicely. Let's go to UNP. I haven't looked at that all day. I've been wanting to look at it. UNP, if I can connect it here. Oh, I wanted to show you something else. I'll go back to I only showed you one thing. I showed you the naked chart. So UNP has gone to a peak E and then pulled back very sharply. And it's an E possibly in the monthly chart. Wow. In the weekly chart and in the monthly chart. That's Union Pacific. So, all right, that's not one that I can do right now because unless I took it from the A, B, C, and D. Okay, well, let's do this. Let me show you something. I don't like it when it's this stretched out. That's really the issue here. Okay, so let's take it from there. So now you've got, and I'm just showing you a methodology, one particular methodology. See the way the MACD is rallying? I'll move this up a little bit. See the way the MACD is rallying so nicely? Oh, that's a break already? Well, we've got a break coming up. This is Basil Chapman sitting in for the one and only Darrell Martin. And I'll be back. Dow's up 77, S&P's up 9.80, and we'll be right back after these messages. I'd love to take your calls to 877-927-6. Right, I'll just finish.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman. This is not the Tiger Technicians Hour, but it's Darrell Martin's trading Diagnostic Trading Hour. And we've got we're looking at UNP, which is Union Pacific Coal. And I wanted to show you, this is the naked chart right here. And what do we expect from the lowest, most obvious low bar? We expect to count 4 higher peaks. It can go higher, but 4 is really the objective. In this case, it goes from the low bar at 10:10 on the 1st of December, a 10-minute bar of UNP at 113.18. It goes 4 higher peaks, pulls back a little bit, and then extends to an E, and then has a sharper drop. And then on the today, it gaps down. It opens, gaps down to a lower low, and it starts a brand new peak A, B, C, and it's gone to a D, just like the other one. There is a difference. If I look at the technicals, look what's happened. Here it is. So there it is. You see that beautiful green line? That is the fast-moving average, or the 9-period differential of the MACD. I call it the fast-moving average because it moves quicker. But basically, all it's doing is it's showing you the histogram. It's showing you the distance right there till it breaks under the 0% line, then goes back again. Well, this did not break under the 0% line in that very high volume bar. Instead, that's the volume, the red and greens over there. Instead, what happened is it held the 200-period exponential moving average, the purple line, started a brand new peak A, B, C, D, and now it's at the D, except this time the MACD's fast-moving average is starting to pull back. That's a little bit of a warning that says, hey, just very, very near term, it's struggling a little bit to hold the 9-period moving average this time. And then you've got other moving averages inside there. This dashed one right here is a 50-period exponential moving average, and that's right at 116.47, about 90 cents lower. So in the meantime, it's holding quite nicely. The stochastic is above 80%. I like that. And it's trading at 85.90. On balance volume is not very good. And what I'm looking at here is a relative strength. That's that little red that goes to gray line inside there is starting to weaken. It's not breaking down, but it is starting to weaken a little bit. So we'll keep watching this. Now, let's go back to our BIB. What we were looking at the IBB and see where that is. Did that have that fractional move higher or not? Ooh, it's holding very nicely. Looks like it wants to move a tad higher. Looks like it wants to move to the 305.71 area for D. Now, what I normally would do is I would just grab this and I would draw a rectangle like that. And that's the same to me. After the flagpole move up like that, you would get the flag, the rectangle formation sitting there, and at some point you should have, within the inside of this, you should get a peak A, B, C, and I usually color them gray. Let me see if there's a difference that you can see on your on Tiger TV. I'm changing it right now. Let's see. And that should go to the 71 level. It's at 70 right now. Another penny. Squeeze, squeeze. Let's see if you can do it. Should do it. Especially since the IBB, in essence, has in some ways been a leader of the market. And another way, it's been a companion. When the market has pulled back, it has also pulled back. When the market has gone up, it has rallied. But very often, it leads the move to the upside. So now let me just have a quick look. 70 hasn't gone to 71 just yet. So here we are. Here's the naked chart. And what I would draw in this particular chart, it just seems very obvious to me that you've got two patterns here. One is the cup formation right there, which says I want to go back to test the 306.38 level, and the other says that within this there was an H pattern. You know, if you've listened to me on my show or when I've done Darrell's show before, I've spoken about the H pattern. In this particular instance, there are two fighting patterns. The one that's breaking out to the upside is the confirmation that there was a successful H pattern. What is the H pattern? H pattern is merely this. It looks like that. Come down, have a bit of a rally, fail, at usually a peak A or B, and then have a retest of the left side low. If it's successful, if that is successful, it then can form a pattern that looks like this, like that, and like that. And a cup formation forms, and it can go back up. And let me make this a different color, because look what we've got. We have got it as we're speaking. There is that breakout right there. We've just done it. We've got that leg D. Isn't that amazing? I just don't know how many times this happens. All right, I'll be back. It's a break coming up, and then we're going to go to Bruce in Lakeland. Hold on, and I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back, and I'm sitting in for Darrell and Basil Chapman here. Dow's up 90, S&P's up 11 3/4. We're going to go to, who are we going to go? We're going to go to Bruce in Lakeland. Bruce, how are you?
Basil, you're working too hard today.
Thank you. Hey, that's nothing to the other stuff I have to do as well. So tell me, what is your question?
The question is, I'm still confused after all these years of listening to you. I guess I'd never in my mind answered this question. When you get a low, let's say you get a low at 100.
Yes.
And then you go up on an A leg, and then you get an A peak at, let's say, 108.
Right.
And then you pull sharply back to 102.
I'm going to answer your question. Very good question. Finish the question.
Okay, so when you start moving back up and you get above 108, is that an A peak or a B peak? In other words,
so
do you start a new count when you go back to 102 or not?
Okay, so over the years, what I've done is what I've done in my CD, and it still applies in the CD, but this is really a refinement. In the CD, what I discuss is that if it pulls back and it gets really close to the original low bar, I'm just trying to find one right here. I'm looking at Pfizer. Pfizer's still looking good. Let me just give me 1 second here, because I want to answer your question with, let me just look at the gold stocks, GLD. Okay, all right, this is going to be good. So let me go to GG. Okay, let's use GG, which is Gold Core, as a good a proxy, a good template for the question that you have. So Gold Core makes a low on the October the 31st at $17.01. Here it is, 17.1. Now, we don't know where it's going to go to or anything like that. So let me move this over to there, and let me expand this right to 17 right there. So the very next day, so here I'm pointing to this particular chart right here. And that bar has a higher low bar the following day. So that low bar is 18.10. More than a point higher. But the very next day, it has an inside bar, and the following day, the third session after the low bar, it pulls all the way back, and it goes to 17.72. So your question would be, I'm going to make this a two-part question just so that I can answer it really clearly. Because, and one has to be looking at the chart, on October the 31st, GG had a high of 18.95 and a low of 17.01. And the next day, the high was 18.94, a penny lower than the previous day, but also quite a bit higher. That makes a trough right there. And let's just call it, for argument's sake, this is trough. It isn't really A, B. Let's just say it was trough D, just for argument's sake, right? Then what happens is I can't yet put the A for the beginning of a new leg up because I haven't made a higher bar than the bar that made the low. In other words, I need to make a higher high than the October 31st high of 1895 before I can call it leg A. Meantime, back at the ranch, I don't know whether the low that was made on the 5th of November at 1772 is going to test 1701 or not. So far, I haven't even been able to put the A in. But the moment that it goes above 18.95, and that is the bar right here, this bar of the 7th, I can call that leg A. And that trough D has not been broached. Now, let me just answer your question as specifically as I can. The answer is, over the years, and I found this out by trading the futures a lot. I mean a lot. I found this out that if I was to treat the low bar of 1701 as sacrosanct, a break, it doesn't have to be even a close, but a break to $17, a break of that low by 1 penny, negates the buy mode, even though it could start a brand new buy mode from that moment on. But that's finished. You can't even consider that that was a buy mode, a buy signal that was given. So let me answer your question. When you start and you think you've got yourself a leg A, and you come back and you test the low bar by not breaking underneath it, that A is still sitting there. Within that, you could still get lower lows after the A that doesn't break 1701, and you might get an inside buy signal. So if I'm using the GG example, I've gone to a peak C at 2138 on the 19th of November, and so far I've not yet broken above it. And it's just gone sideways, but it hasn't broken down either. So let me see if I can find... Wait, does that, in a sense, answer your question?
Well, it seems like I've seen instances where, you know, the test of the low was a little bit deeper than what the example you got here, and it seems like either I or have seen you start a new... It didn't break the previous low of 1701, but it went down deeper on the retrace than what you're showing on your example, and
yes,
you started a new A leg up from there. In other words, you put like A minus, and you put A minus at that first peak off the low, but then
yes,
when it went so deep, then you started a new buy mode off that deep retrace.
So let me try to find an example. It's a great question. And you know what I'm going to do? I'm going to, over the next few days, I'll try. Friday is usually Technical Friday, so maybe Friday I'll deal with it a little bit more. But let me answer your question by saying, if after the A, I have, you know, in my mind, I have these perfect chart patterns, but at the same time, I always forget to take the time to remember I've written it down in a book, but I just don't have the book handy right now, of these examples. So I know the pattern so well, but I just don't remember which stock it was or what time frame or whatever. So I'm trying to find it right here. Let me see. Ford, no. See, I want to explain to you that if after that initial A, sometimes A is very sharp, and then what happens is you get a pullback, and then you start a brand new A, B, C before you even take out that previous A. That's the restart. So the first A gets an A minus. Why? Because it's superseded. I want to be as conservative as possible, so I would rather take the new buy signal to buy mode as being the one I want to follow, because the other one, by the time I maybe get to C in the shorter time frame, that would only be a B. And then I'm stuck, because basically I get to the D correctly, but my larger time frame is still stuck with that very strong leg A that didn't fail, but it didn't produce the B and the C in sequence like it should. So let me just put it this way. You're looking at the mountain. You got a very sharp incline. That becomes A. It comes down like a valley very sharply, and then it starts the hills with higher peaks and higher valleys, and all of that is occurring under that initial very sharp move up. So that's really what you're looking at. You get an A minus because basically it's been superseded by another buy mode. Hey, this is exactly what we're looking at. Let me do this. The IBB went to a peak. Oh, I don't know what I was wasting my time for. Look, this is exactly what I'm looking at here. I knew I'd seen it. I seen it because I just done it. Look, the IBB 10-minute chart. Let me find the 10-minute chart here, the naked chart, because it's even clearer. Look, I've got an up arrow because it is such a powerful move in the IBB, and it goes peak A, and then it goes right there. It goes A, then it goes B. I don't know if you can see my charts on Tiger TV, but if you do, you will see this is exactly what we're looking at. And then it pulls back, and then underneath it, it has I keep forgetting, it has a buy mode within that actually supersedes the A to B, B minus, because I've got a perfect A, B, C, and you hit the D, and now with the doji candle, you're pulling back. So, that explains it exactly. And then what you'll always see me do is under the new buy signal, I put a plus sign. Does that look familiar?
Yes,
Okay. So what I've done is I've explained to you that sometimes the original takeoff is an emotional takeoff, and that the real momentum is going to be derived from the MACD and the stochastic holding above 80%, and it's going to take you to an A, B, C, and even a D, going back towards that spiral to the upside. In this case, it's going to should attempt today to get to the 306.38 area. We'll see if it's possible. It's already gone to 306. So it just needs another 8 cents, 38 cents.
When you're going back and looking at some other chart, I remember October 15th at the ES Minis, they made a low, they made a really sharp candle up, and then they made another sharp candle down. I don't remember which time frame that was, but you may be able on the shorter time frames to see something there, because it made a sharp spike up and it came down and stopped one tick above the previous low, and then it eventually took off from there.
All right, so let's look at it. I've got it right here. We'll just go back to October the 15th. October the 15th. That takes me back to there. October 10, 11, 12, 21. I'll set it right now. Oops, don't want that. I want this right here. Okay, I'm going to just set it going back further. 120-minute bar, 30 days. I'll go 40 days back. Let's see what happens. Okay, let's see if I've got it. right there. Okay. Oh, that's exactly it. Yeah. Yeah, good. Whoa, nice remembering the chart pattern. So here's what I did. The pattern that I just drew with the cup and the arch, the two fighting patterns that I drew are exactly what I drew right here. Look. Let me see if I can find it. No, there it is. You see, if you're looking at the 10-minute IBB, because patterns repeat over and over, you see the pattern that had the green cup formation, that's a positive formation, and the H formation, I drew that very pattern right here. There it is. Let me expand a little bit. Now, this is a little bit different in that I decided, it's a little unusual, this is another modification of my technique over the years. I decided that was an A minus, and that was the real A right there. And that's a little unusual because technically that B should have been the A. I don't want to make it too complicated, but since the low bar was 1813 on the E-mini, it went spiraling higher to leg A at 1863. That's a 50-point. That's a huge move to the upside. And then what it does is it pulls back a little bit, and then it makes the real A over there. Then the pullback went down to 1815.25. It went $2.50 above the initial low bar. The MACD was acting very well. The stochastic had a positive divergence. And we got that follow through on the 16th. And if you remember, that's when I was in Sydney, Australia, and I said we have to cover our short positions and start going long. So in this particular instance, that's exactly what you're talking about. And it took us to a D. Then it took us to an E/A, B, C1, C2 at 1943.75, pulled back, but eventually went to a D and an E in that cup formation, and then pulled back, went to an A, B, C, D, E, F, and a G at 1985.75, pulls back, and at 1959.25 on October the 30th started the new rally, and that's A, B, C, and that's gone to a D, a recycle, and it's gone A, B, C, D, E, and it's had a number of buy modes since then. And the final one was the one that pulled back from 2039, the round number behind, the E-mini, on the 11th of November. It pulled back, and then it started this really sharp up and down move that has taken us now to the round number 2054, pulling back 2035. You can see that the cup formation, I'm going really quickly, but I'm trying to show that the notation has this D and an E as really important. So the last E was at 2075.25, plummets down to 2048.25, and now we're in a leg B in a 120-minute chart. The big question is this going to produce a C and a D? And that's going to be very positive, at least in the short term. So I hope that answers some of your questions. You got any other questions, Bruce?
I do have one more question after your break.
Hold on, and we'll be right back. We've got Bruce and Lakeland asking questions about the Chapman wave. We just went through some of them. I'll be right back.
Take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told
told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Hi, folks, we're back. Basil Chapman sitting in for Darrell Martin, and Darrell will be back tomorrow, so it's my pleasure to be here for today. And we were just talking about these patterns. I'm just showing the E-mini now, the 10-minute chart with that flag pattern that I had identified earlier on. You've already got the 1-to-1 expansion to the upside, and this is an E/A. Next question, Bruce. I'd like to hear from you. What is the question?
Okay, excuse me, if you can go back to that October 15th low.
Okay, my pleasure. Here we go. Just quickly checking to see if there were any questions in the meantime. Let's see, we've got this. Don't forget, folks, right after me, you've got Dave White, Power Vector Indicator. This should be a great show with Dave. I'm going to go back to the 120-minute chart. Yes, the question is?
Okay, after that first spike up that you had, I probably, if I was doing this on my own, I would have looked at that as a three-wave retrace down, and I probably would not have put an A where you did if I was doing it on my own. I would have had my A where you have your B.
Yes, and I would, you know what? I think that you'd be absolutely in, there'd be no problem with that. It would have taken you eventually to the D, where I've got the E, but that's no problem at all. Why? Because that's the traditional way. In fact, I spent a lot of time, and one of the reasons why I wanted to put the A there and see if there was going to be a test of the 1813 or a breakdown was just to warn me that this particular pattern was the cup pattern and the arch pattern fighting with one another, and that the winner of this could be very powerful. In other words, if there was a close under 1811, we could have gone down a little bit more because there were other targets in the 806 to 805 area, and that made it very important. Theoretically, I probably, even now looking at it, it looks just really weird. It just doesn't conform to anything. But the fact is, right up until that moment, until the very next bar at 4 o'clock on the 16th, I could theoretically have capped that as an A if it wasn't such a deep pullback. So I'm with you. I keep looking at this and I say, you did that at the time and you had reasons, but it was unusual, and you can't, if you're going to form fit your methodology, you're in trouble. So I'm with you. Now I can say I'd automatically wanted to put that in there, and that's an A to B. That's a C. It wouldn't have changed very much, other than I would have missed the deepness of this pullback here, and that would have definitely made that a D right there. So, and that would have conformed with the patterns that we see in the MACD. So you're absolutely so. I always request anyone who has a problem, you don't have to be a subscriber, anyone, just if you have a problem with your Chapman Wave methodology, that something's different, or you see me do something, email me right away. I'll send you an explanation, or I'll send you the chart and just tell you exactly what I did. So thank you so much for bringing that up. When I did it, after the time I did it, I spent a lot of time looking at it, and that was my decision. I can't remember if at the time I even explained it on air. Oh no, I was away. I didn't do my show, so I couldn't explain it. But that's my thinking, and you're absolutely correct in asking me about it, because I would concur with you that really is the A, right there. You know what? Actually, no, I should say that over again. That A minus should still be intact, and that should be B. I'm changing everything I just said. Why? Because it took time, but it never broke down. And under it, I didn't have. You know what? I'll talk about it again tomorrow. Either way, it would have worked. But technically, I think that I'm looking at it now, and I'm saying, you can't change your plan. So let me do a little bit more tomorrow doing my show. Okay?
All right. Thank you.
Thanks for bringing it up, and I never really answered you correctly. Sorry about that. I'll be back tomorrow, folks. Stay tuned for Dave White.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.